is my mantra. Why is it so important? I thought it was all about picking stocks. Well, maybe not. So we'll look at that a little later on in trading tactics. Trade risk, portfolio risk, market risk, there are a lot of risks that we need to control. We can all do that through our trade plan. Hi, my name is Richard Lee and I manage the stockradar.com.au website for you. We run a quant strategy based on high probability signals to create a trading edge. What do? I use my 40 years of experience to educate investors on such things as price analysis, risk management, discipline techniques, systems, behavioural analysis, processes, trading models and portfolios, and of course expectations management. We all need a little bit of that. All these issues are brought together on my website to help you understand the market better, and we have our unique trading centre that leads by example to show you how we put it all together in a real live trading examples. Okay, so today we're going to go through talking about our portfolio, building a portfolio which we've been looking at for a while, building a muscle portfolio, one that's strong, robust, has risk control and can also take advantage of market moves. There's our format for the day. Overseas markets, look at the ASX 200, look at some portfolio stocks, and we'll get into trading tactics and see what we can do for there. So let's go straight into the markets and look at the Dow Jones Industrial Average and see how it's performing at the moment. We hope. Okay, so the Dow Jones, as you can see, it's just starting to nudge its head above the highs here. So the trend is still up. We saw these big long bars down here. The buyers just kept buying any weakness in the market, and you can see here very, very solid buying over this last month, helping to push this index up quite a few points. And we can see our momentum index is starting to flatten out above zero, so it's still in positive territory and looking okay. So this trend is nicely intact for the Dow Jones Industrial Average, and NASDAQ is not much different. It's actually pumped through here pretty high. Pretty high, is that a word? And we can see again this great volume kicking off through here, and this is also steadying above zero and looks like it's about to kick up again. So these markets are looking strong. There's no doubt about it. How long we'll go on for, I don't know. But we just take it from what it is looking like today and not worrying about tomorrow or the past. We just look at today and the market says it is trending up. So we hang on to that. Okay, and a slightly different thing we've got here, Brent Crude. We've had a little bit of selling come into this stock, into this market I should say, to this commodity market. All prices, they've risen a long way over the last 18 months, and we've come up here, we've met a bit of selling here, but this buying was very, very strong, and maybe we're just a little bit of tapering off here, but everything looks okay. The moving averages turning up nicely, volume is good, and the MACD is positive, so we still need to hold this at the moment, and it still looks okay, Brent Crude. All markets have corrections, as we know, and this one had a big correction here and recovered again, so that's just part and parcel of trading. So Brent looks okay. Copper is struggling, resolution hasn't been made yet in this little trading pattern here, so we'll wait and see there. There's certainly some sellers out there at the moment, and momentum's gone right out of it. So it's just going through a bit of a period of consolidation at the moment. There's no real breakdown. There's a bit of resistance for high prices, but there's a good support down here at the lows here. So just a little bit of consolidation in copper. Gold still down. The pressure is still down. The high is all lower. We've got support here at S1, which it may well hold. We don't know yet, but for the moment the pressure is on there at this stage. So we'll just have to wait and see what happens. There's not a great deal of volume here. This momentum sagging below zero. So gold, we're a little bit out of there. Our gold sector hasn't really been firing for quite some time. Okay, let's get a look at the AXJO now, or the ASX 200. Now, it's also done pretty well. It's come back to find support, as we saw last week. It's holding in between this range here. We've got a bit of rotation going through energy markets and technical markets, things like that. So we have to wait and see. But for the moment, the trend still holds nicely. The ASX 200, the portfolio was down 9 last week, so we took profit on, I think, about 8 of those 9 stocks last week. So we're down to 67 stocks of 188. Don't really know what that means, but when the start's coming off, we get a little bit wary, even though the trend looks up here okay. The conservative still is full at 5 out of 5. The 10 stock has dropped to 8 out of 10, and the conservative has dropped again to 6 out of 20. So there's a little bit of reticence there. In the sectors, we've got the portfolio, we've got the property stocks and the banks. Other things have drifted out. Diversified, industrial metals have all drifted out of that top sector there. So we're left with those mighty banks. Westpac's had a tricky week. CBA's had a good week, so a bit of divergence there. But the other banks seem to be okay. We've lost, I think Bank of Queensland fell out. We're going to look at that a bit later on. So we're seeing a little bit of profit taking there at the moment. We're going to look at building our portfolio. We're sitting at about up 16.1% yesterday. It's a controlled, high conviction portfolio. It has 5 stocks in it, and I'll look at that a bit later on in trading tactics. Okay, so let's get to some stocks now. JB Hifi, well, what a week. It has kicked higher quite strongly. Today's pretty flat, I would think, but we've got certainly testing. You know, we've seen some good results out. We're very excited about Christmas time, things like that. So we've seen a little bit of buying come back in here. Nothing outrageous, but there is some buying here. Momentum's after slowing the downward trend as we've gone sideways. Remember, if we continue to go sideways, the momentum index will drag along zero, which means there's no upside or no downside momentum. So we're looking for this to get above zero for some upside momentum. We've got a few things that will help us. One is the resistance here, which goes right up to about $54. We have the moving average, which is above, although it's reasonably flat to down at the moment, the moving average. Volumes are a little bit indifferent. We've got a bit of selling on this last sell-off down here, so whether we got the strength to punch through this area, I don't really know at this stage. So we'll keep an eye on that one. But JB Hifi, the trend intensity rating has moved up into the neutral zone at -3, which is also a good sign. So the selling pressure certainly seems to have gone out of it. Whether it can muster a rally, we'll have to wait and see. Okay, now I'm going to go through new highs. What have we got new highs? Well, Premier Investments. We started our coverage on this year in our January review. Every 6 months we review the stocks that we have in our data universe, and Premier Investment came in, and shortly after it came in, it made a new high. And really, apart from, I don't really look at what's happened before. I'm not too sure what's going to happen next. I don't really care too much about the fundamentals because they can be so diverse and hard to read. But when I get a new high, that's the one thing that I do know that works well. So I trade the new high, I buy the new high, and I put in a risk management stop there. And that's what I did with Premier Investments. And it's had a really nice run from here. So as I say, at this point here, I have no interest in past or future, just what's happening at the moment, and that says buy. We've got some volume here. This has started to kick up, and we've just had a steady uptrend here. This momentum index shows it's been pretty steady, has blips and blips. We had some very, very big buying here in this last run up here. So this stock is in pretty good shape, I would think. So just lift your stop and hang in there. Who knows where it will take you. Okay, Mr. Lou. Okay, now CBO. I just want to show you this again. It's about trending stocks and hanging on to the trends that matter, and not worrying about should I be taking profit. You just have to wait for your signals to come. So Commonwealth Bank, we know a long time ago it made a high up around $95. It has since been broken this year. Early this year, and it's been after the trend reversal here. We've got a nice trend up here. The stock is now moving high, and we've got this sort of little pattern here, which we've seen before in a lot of stocks, with resistance at a certain level, and the buyers are getting eager and eager as they lift their levels to buy, which eventually pushes through usually. So we're getting a push through here now. Whether the cryptocurrency surge in CBA is going to kick it higher, who knows? There's all sorts of reasons for it, but from my point of view, this stock is going higher. It's above the average. Volume is okay. Momentum is above zero, so that's okay. It may kick back into a more positive mode if the lines cross again. We'll wait and see that. But for the moment, CBA is still trending high. And remember, we have now made new all-time highs for CBA, and that is significant. So it really has been an outperformer amongst those banks for some time. We're in uncharted waters now. It's a new all-time high. It could take us anywhere. So whether people think they're overvalued or not, I don't really know. But all I know is the price is going up, and I will continue to follow that as long as it goes higher. Okay. Recent entries. Looking at Orica is an interesting situation because I actually came into one of my portfolios this week, and a couple of people were very nervous about it because it's come down from $35 or wherever it was a few years ago, and a lot of people are very nervous about Orica. So let me just put it into perspective for you as to how I view this. Okay, firstly, I'm just going to go back and show you this support level here. We're at a cycle low at the moment. This goes back to 2009. This is 2016. We've got this huge downtrend from, I think it's $35. Okay, so that's your cycle high. Okay, so let's go back and see what we've got now. We know that where we are now, these lows here around $12 after being at $35 is a major cycle low. Okay, now we've got these 1, 2, 3 fairly important lows here. Each time it's been bought up, we've seen some volume come in here, which was some heavy selling, but the buyers held it again, and we're seeing a few more green bars around here. So this is looking like there's some buyer interest at this level, and this is a cycle low. That's a good point. Okay, now let's go and have a look at the indicators to what they say. Firstly, price. Okay, price here, really we've got a couple of lows here at this point here, so I set this level here as a potential trigger point for a trend reversal, and we've got a bit of support from here just to help identify this level as a key level, okay, as a significant level that if we pass through, it may well trigger further price rises. So here we are. We've triggered through here. We've also got some reasonable volume through here. It's above the average, which is now turning up, first time for quite some time, and MACD is not quite there yet. Now you see this trend intensity rating of 6. Often trend reversals will have a lower rating than a new high. A new high will always have, it's above the moving average, momentum is usually good, volume can be a wild card. But with a trend reversal, often the MACD is the laggard as far as waiting to turn. So we often don't get a positive, a maximum trend intensity rating until the trend develops a bit further and the MACD kicks in. So a low trend intensity rating on a trend reversal can mean we're just at the start of a trend. So let's wait and see what happens. You can go a long way, you can go a short way. I don't really mind as long as I can make a bit of profit hopefully and make sure I don't lose any money. So that's what I'm going to do. So the trend reversal off a key low is a very, very exciting thing. Putting all nerves aside and historical events that if you bought it at $35 or $25 or $20, you're not a happy person. But I look at the now, and what I see now, it's got down to the cycle low at $12. I buy reversals off a cycle low because it's a very high probability turn. If they're also supported by price arguments, including volume, including moving average, including momentum, this is all a positive thing, and this is all controlled by a risk management process where I say, okay, this is having a go. I'm going to risk a certain amount on this trade. If I'm wrong, I get out, and that's what's happened. And that happened with Horizon recently. It looked like it was making a low, it didn't. It fell below the low, so we get out of that and we just move on. So Orica is a good setup and a positive setup, and it's becoming a high probability option at the moment. So we'll watch Orica, and I'll check in on it every couple of weeks and see how it's going. And it may flop, I don't know, but we'll wait and see. Okay, now Bank of Queensland, the banks, we see CBA going through the roof. We saw Westpac being very, very naughty, and its price came off last week. We'll see what happens at the end of the week. But on the regional banks, Bank of Queensland, we don't hold Bendigo Bank at the moment, but we have been holding Bank of Queensland for quite a while, since October last year. So we've had it for 12 months. We've had a rally of 34% from start to exit. Okay, not from high to low, but from start to exit. And now we've got to this point here, we've reached an R1 level, a resistance level. If it hovers below a resistance level, like it has been for a few months here, we tighten the stop, we tighten the stop, we tighten the stop until it gets toppled. And it was toppled last week, and so we were at an exit this week. And you can see here we've dropped below the average, the volume's increased, and the MACD is sliding, it's still above zero. So what is happening here is the odds are decreasing that this trend is going to continue. So it decreases to a certain point, then I'm going to get out, because once my stop loss goes off, I'm out of this, I'm going to take my profit, I'm going to sit here, and I'm going to wait and see what happens next. It may break through R1, we may get a new high signal, it may come back down, we don't know. So that's how I look at stops. I protect my profit, I don't fall in love with the stock that's gone up so far so quickly. 34% in 12 months is great. But the fact of the reality is that this has hit its stop and I've got to get out and turn neutral. So that's what I look at with stops. Always important to do that. Okay, now, next stock I want to look at is a stock called CSR. Talking about how our strategy works, we stop, we have a trend, we get the stop goes off. When the stop goes off, we wait for three things to happen. It can go down, do a trend reversal from a lower level, it can go sideways, or it can go up again, triggering a new high. In this instance here, we've got CSR, which we did follow for a while on YouTube, as you know. And if we just go back, we can just see the trading range that CSR was in for some time. The cycle high up here at about $6, the cycle low down here at about $2.50. Okay, so we got a trend reversal back here earlier or late last year for CSR, off a key low again. Now this was where we got the signal here, was about 430. So we took the signal there and it has rallied, it come through here, it tried to get through here. We can see all these long wicks here of sellers just dragging this thing. Eventually it did push it down, the buyer did a little retreat and our stop went off. So we locked in our 20% and stood aside. Okay, and we did see Boral, we did see a couple of other stocks come off. James Hardie's still been a very strong one in here, but there's been a couple, Aurora, Reliance Worldwide, which is back up again. They all came off around a similar time, so there's a bit of profit taking in that sector, and CSR was one that was taken out. So now we've got this pattern, we've hit the stop, okay, and we've now seen the market seems to be recovering reasonably well. Just push this volume up a little bit. We've got a resistance point up here, and we've got this increasing buying here, which is a pretty good sign of demand. So I'm just going to sit here aside in my neutral thing with my 20% in the bank and wait to see what's going to happen next. If CSR kicks above here, then it looks like probably a new entry. So that's the Stockradar strategy. If a new high occurs after my stop goes off, I will rebuy it. I've always got to be on a potential trend. That's why I always take a new high. Okay, so it's above the average. Sellers are active here reasonably. A bit of buying here, and momentum is still above zero and positive. So the trend intensity rating stands at 0 at the moment, and will kick into positive territory if it does get above the resistance level, which is up around about about $6. So that's CSR, interesting one to watch. It may break to new highs. It's had a pretty good run of late. Okay, one we looked at a couple of weeks ago was a little stock called ImpediMed. I think it was about 17 cents when we looked at it a couple of weeks ago, but it's still performing pretty well. You know, that trend intensity rating should now be actually about 8 or 9. I'm sorry I haven't updated that one. But the volume is very good, momentum is very good. In fact, that trend intensity rating will be plus 10, it's so good. So this is looking like an interesting stock. It's a small stock. What I play for the most part, is in the top 200. That's because that's a risk control thing that I have myself. Those stocks are less likely to collapse than a small stock. So small stocks can be quite high risk, and you need wider stops really. But that's why part of my risk control is working in that sector. So ImpediMed, although we like the stock, make sure you have a stop in place to protect yourself here. But it's looking very, very interesting at the moment. So keep an eye on that. And finally, to finish on a good note with my stocks, Macquarie Bank once again just keeps performing and surprising. And this rally, we did get into this one here back in March, and it was a very, very slow starter. We had to be very patient with this one, and we sort of thought, well, is this going to go on or not? And eventually we just start, this thing almost goes exponential. These gains are getting bigger and bigger every week until we get to $200, and then we see a little bit of selling come in, which is quite natural, which is what happens. Where will this take us? I don't know. Just lift your stop in this situation, but we've got some very good money in the bank on this one at the moment, and hopefully it will continue higher. The volume is doing pretty good. Momentum takes off. It's above the average. It really is, because it's so far from the average. You've really got to lift your stop up to take advantage of this very, very fast move. The majority of our trades are less than a year. That's why I annualise a lot of my stuff out, because I do multiple trades within a year, and very rarely do I trade for longer than a year, occasionally, but not often. But this one we've been in since March, and where it will take us to, I don't know. Trend intensity rating is +9 for Macquarie Bank. Okay, so that's the stocks I want to look at for you today. Now I want to go back to my trading tactics and talk a little bit about building a muscle portfolio. Just take you through a few things. Look, be aware about a few things about a portfolio. Our expectations have really got to be managed very carefully. A portfolio can stay flat for a year, you can go through a 20% surge for a year. It just depends on when you start and the stocks you hold. So just be patient, because my situation with my portfolios, if I just show you how the return that I've got, this is the homepage of Stockradar. If we just slide down here and look at these portfolio returns, this is since 2003. Okay, so we had a big strong period, 2003, 2006. We had some interesting GFC down here, which now pales into insignificance, and the COVID thing may well also do that. These things are part of markets, so you will get flat spots in your portfolio depending on when you start. If you started here or started here, and you will also get spurts. So just be patient. This is a long-term approach, not a 2-month, 6-month approach, 1-year approach. You've got to look out a bit longer to watch for this sort of thing to unfold, because it has unfolded. We've taken some big bear markets into here, and we're still performing well, because that's our strategy, which works okay. Okay, so just be aware that depending on where you are and when you start, it will depend very much on your portfolio. So just be patient and be strong, and look at what we've done over the last 18, 19 years. So be aware, in the initial stages, the start date can have an effect. Okay, if you start when the market's topping out, then your portfolio is not going to perform straight away. If you started March or April last year, then a few of our clients started then, and they've been in a very good position and well up more than 100%, some of them. So the start date can have an effect. You must have patience. Don't expect things to happen overnight. The expectations things we have is a really, really difficult thing that we need to control. There are spurts in the market and flat spots. For the majority, it goes up. We will outperform in down markets because we move to cash, but very rarely do we outperform in up markets. It's very, very hard to outperform in up markets, mainly because it's very difficult to have all those positive stocks, as you might have a couple of stocks that aren't performing so well. It doesn't matter as long as you're making a good return on your money, and that's the aim. I think I talked about in the newsletter this week, are you going to beat the market or attain your own goals? The important thing is to attain your own goals. So, yes, we get it wrong. Okay, that's why we always insure, and that's our strategy. Okay, so we're always playing the probabilities, not the guarantees of how it unfolds. Okay, now, so be aware. Controlling risks keeps your capital intact in tough times. There will be tough times and good times. So if your portfolio is a bit flat, that will happen as long as you're not losing money, and you're round about where you started, then that's a good thing because your capital stays intact, because when the market does surge off, you will make some money. And that's the sort of the strategy that I'm in at the moment. That's why I like to control my risk. That's the plan. Protect your capital like a little baby. Okay, your expectations are dangerous because they are rarely met. We all want things to happen too quickly, too fast, and too much. And that doesn't always work out, so we always set ourselves up for disappointment. It's natural to over-expect, but just try and control that. So be respectful of what the market is offering, trade the plan to get the outcome, okay? So managing expectations is always a difficult thing, and so you just have to be aware that this is just how it works. You've just got to be patient and let the probabilities unfold. Okay, some tips for you. Okay, don't look at the market every minute, every day, every hour, because every time you look at the market, you will value it against your portfolio, and you say, oh my God, it's up, oh my God, it's down. It's a really bad thing to do because it's not going to do you any good. Okay, so take a step back and breathe deeply. Don't even worry about it. I very rarely look at the market during the week. Nothing serious anyway, okay? And it makes my life a lot easier. If you have a system, follow it through in good times and in bad, okay? So the barrage of information just keeps coming, whether it's price information, whether it's ups and downs of the market, whether it's news, whether it's rumours, it just keeps on coming. And so we're always reacting to the latest news that comes in, and that's not a good thing to do. It will not help you. All it will do, increase your stress levels and your anxiety. So what does Stockradar do? We trade trends. That is our aim, okay? Not really looking to trade trading ranges or buy options or do this or do that. All I want to do is one specific thing, trade trends. Short, small, short, fast, long, they're all different. Whichever way they break, we trade them and protect them and construct a portfolio and construct controlled portfolios, which controls all those things like market risk, stock risk, all the different things that we have in there. Now, if you look at Whitehaven Coal here, now we got out of this one a couple of weeks ago, but it was an up and a down when it came down sharply. Now, you could still hang on to that if you want to, but we got out of that, and that was a very quick trade, 23% chunk in about 6 months. So that was about a 50% annualised return on that one. Even though it doesn't look like it, that's what it is. It's about taking your signals both up and down and being responsive to what the market does. The stop rises to ensure we protect an outperforming gain, and that was a very, very fast gain by Whitehaven. We saw some fantastic volume down there with Whitehaven, but all of a sudden you can also see some fantastic volume on the downside. So that was really a warning, and when the stop went off, that just finished off that trade there. So that's what happens. This was a fairly short trade. Okay, so let's look and see what we can see with our portfolios. As I said before, you can start at different times, and it will vary very much. It could be January this year, which wasn't a great time to start. It could have been April last year, which was a fantastic time to start. You just don't know when is a good time and when's not. You just have to ride those waves through. So we started this one in lifetime for you in March of this year. Okay, so we know very much, just showing you this portfolio, we know very much that we did take a loss on JB Hifi, we took one on Adelaide Brighton, we've got a couple of profits there, okay, so that's our closed out positions, and if we go across to here at the moment, we can see our current positions. We can see Computershare, Car Sales, WiseTech, Incitec Pivot, and Orica replaced Soul Pattinson a couple of weeks ago, and I think Soul Pattinson is still coming down, and Orica is just trying to get up. So our returns here, we're looking at computer share, is 29% up. That's nearly hit our 30% level within a year, which is where we like to take a little bit of profit off the table. Car sales has done nothing. WiseTech has had a good increase. Remember, this is since August of 21, so this is a pretty good return so far. Don't sneeze at that. And the other two here, Intertech, Orica 3%, neither here nor there. But this is still a good portfolio. We've got some very good winners here, 2 good winners out of 5, and that's pretty good. Okay, in fact, all of them are profitable, so that's even better. And if we look at the results of this portfolio in a trading position, we can see our total portfolio return is 16.2 since March. That includes dividends. So here you can see trades, all your different areas here, your gross, your net P&L, any brokerage involved here, dividend income, etc., etc. So this will give you your full return basically here. So that's the building a portfolio. That's been good. And as I said before, it can vary very much when you start. It can almost be down to a couple of weeks. It will vary. So just you need to get some time to occur for these portfolio, for these odds to play out that we're playing. Okay, so that's the building a portfolio. That's how it's looking at the moment, and we're pretty happy with how that is at this stage. Okay, so now let's go back to here. So that's again another thing I want to talk about is taking signals. Now, with portfolios, to make them unfold properly, you need to take all signals. And it's not like saying, well, I don't really like this one. Sometimes it's okay if someone wants to let one go through, but generally the main thing is to take most of your signals, especially your stops. Okay? Right, okay, so portfolios can differ markedly in the short term depending on the start date. As time passes, convergence of returns will occur. Members who don't take all signals will underperform, and that's the way it is. Okay, keep your perspective, okay? Markets trend most of the time, but every 2 years there's a correction of at least 10%. Every 10 years there's a correction of 30 to 50%. That's the numbers in facts, okay? What is your risk tolerance? Can you manage it? Are you going to freak out when the market collapses, or are you going to deal with it appropriately? We deal with it appropriately. We try and take control, and that's what we try and do, okay? So Stockradar maintains its poise and its control and its profits in all times and all markets, and you can see that from the results of our portfolios over the last 18, 19 years. Okay, so just to finish off here, managing risk, managing portfolios, managing expectations, and managing yourself are all things controlled by your trading plan and your portfolio approach. Lots of controls there that I've put in to do that. It's simple, automatic, straightforward, with a plan of engagement that addresses all these issues of risk. Okay, good luck for your trading week. Thanks for listening. I hope you all learned something this week, and I will see you next week.